This is the only level that matters right now for Bitcoin, and if the price can't stay above it, it's going to start dropping like crazy. Welcome to Bitcoin Escape Plan. This is not financial advice, but it is my goal with this channel to help you better understand the Bitcoin chart so that you can stack more Satoshis on your own. As always, we'd like to start off with the 4-hour chart, just so we have a clear picture of what's going to happen in the short term in the video. Stick with me for a while and we'll get into the higher time frames as well as Bitcoin dominance today. But let's see what the 4-hour chart is telling us. So we're still on a downtrend below this 4-hour SMA, as you can see, since about Sunday of this week. We've broken back to it, and then it's rounded out a bit, and then it is starting to curve downward. It has broken below this 68.5K pivot. Like we've talked about before on this channel for the higher time frames, anytime an SMA breaks down below a Fibonacci pivot, what it does is it puts more pressure on that Fibonacci pivot as resistance instead of support when the price does eventually revisit it. It just means it's going to need more volume and more momentum to actually break through these key levels as they arise on the charts. So right now we've seen two retests of the SMA on early Wednesday, and it looks like we didn't quite get to it. We had failed the Fibonacci pivot on Monday, and we did not touch it at all yesterday. We spent most of the day climbing out of the bottom of the Bollinger Band for the 4-hour. So if you were looking for it, this is actually a great trade entry for a short-term swing right there. Or an intraday trade rather, not a swing. Swing you'd have to be more patient for. What we're looking for right now really is this reaction here though. This is the anchored VWAP. I've talked about this many times in other videos, and this is the middle band of the anchored VWAP. So if we zoom out for a moment, we can see this is the upper band all the way up here, and we broke through it in about middle of January. This is something I was talking about quite a bit because we had been dropping down into it, I believe as early as October or November. It's in past videos, and this is super important. Like, no one was really talking about this level. I don't understand why more people don't talk about this tool. It's like the most valuable tool that's free for you on TradingView, the anchored VWAP. It's in the this one, the projection volume based. Super valuable. Definitely take a look at it. I explain it more in other videos. Regardless, when we drop below that upper band, what that meant is that we were going to need to see, one, how far below is it going to continue to go before it recovers it? And then we saw very quickly that it lost it almost immediately once it hit that 97.9K high, which again, the market will regard as a failure of 100K. That's psychologically what occurred when we went to that high. Was the market saw, oh, it can't get back above 100K, and therefore had to send it back lower to see where it can actually get to. So at the moment, we are still in that downtrend. It's quite possible that we have bottomed out at 59.9 in early February. That's what it's looking like at the moment. There's a couple key levels that I'll go over in the higher time frames later in the video that give us evidence of why that may be forming as support. But right now, all that really matters is this middle band of the anchored VWAP. We spend most of our time above the upper band. So when we've broken below the upper band, once we are interacting with the middle band at all, we're going to get pushed below it. Period. Like there's very few instances where we interact with the middle band and we stay away from it once we've interacted it. The upper band is really the one that we stay away from the longest in the majority of the 4-year cycle. For about 2 years of the 4-year cycle, typically is spent above the upper band, at least on the 4-hour time frame. It's different on each time frame, and I'll go over a little bit on the higher time frames later. But specifically, I didn't mean to do that. Specifically, what we're looking for is a reaction to 65.7K. If we can hold strong, like we did over here in the second week of February, as you can see, these closing candles are right above that anchor VWAP line. So we do wick to it, price goes back above, but it has to drop back to it. And then as you can see, the wick is far below that. This is still above the 59.9 over here though, but this is very strong. This is a very telling signal of what is going to happen next with the market, which I've been talking about for a while. I just think that the actual level that we're going to rise to has shifted a little bit from my original opinion, but it does seem like we're going to have a slight recovery bounce from here, assuming that the price is able to do a similar movement here where it stays above. Now this Fibonacci pivot is reading at 66K on the lower time frames, and that's what we really need to see. We can see a wick. I would say a wick down to 65.7 would be fine, but if we can't get a consecutive closes above 66K, it's going to put enough downside pressure that 65.7K is probably going to break. And if we break it again, it's not super likely that we're going to snap back to the upper band. This is kind of the only opportunity for us to start a progression towards the upper band, but realistically, we're not going to get there. It's far away. We can go look at it really quickly, but it's all the way at 96, I believe. Look how long it took me just to scroll to that. 95.8K and 96K is the important pivot that we'll go over later in the video. So in the short term, over the 4-hour time frame, what we're looking at now is another reaction to the bottom of the Bollinger Band, which is currently sitting at about 66.9K. As you can see, the wick is currently above that, and it is sloping upward. So that will put some pressure to the upside for the price, but the SMA is what we've failed. That's at about 68K. And you can see these are two clear rejections off of that. So even when we do reinteract with 68.5K, it's going to be as resistance, not as support. So hopefully that helps you understand just the short term. What we're expecting is we need to stay above the Bollinger Band. Otherwise, it's going to continue to drag the price down lower towards that 66K pivot. And if we do that, then the SMA is also going to continue to get dragged lower. And the longer it's dragged lower, the less likely that we're going to be able to break through it and sustain a break through it once we get to those key levels. If that was helpful to you, you may want to check out the website, bitcoinescapeplan.com. You can put in your email. And every Monday, I send you some of these key levels in more detail directly to your email instead of you having to listen to me ramble for an undecided amount of time here on YouTube. So go check it out at bitcoinescapeplan.com. Like and subscribe. Hopefully, you guys are enjoying this content. I know that I am. Let's take a look at the monthly time frame. And the monthly looks ugly. There's no doubt about it. The monthly looks ugly. So weekly first. This is the progression that I was mentioning as where we're also seeing significant resistance show up. So this is the 96K pivot. For a while, it has been my opinion that we were going to see a reclaim to that. It's looking like we've already seen it, and we were already starting to break down. This November one actually was the first time we interacted with it. And that's something we really have to take into context for this cycle is everything is being pulled to the left from when we would normally experience it. If we look at the 2018 chart, for example, it goes way, way longer before we are actually interacting. Well, this is the weekly SMA. It's a little bit more clear on the monthly SMA that it takes longer. The weekly SMA, it's about the same, where there's a drop into beginning of February. This is almost identical to when we just had our drop as well. I think it might have been the 12th instead of the 5th. But essentially the first or second week of February is this local bottom before it rises up. This was my initial, what I thought was going to happen. It's looking less likely now. It's looking kind of ugly now. It's not adhering to the same exact pattern. So this is also pretty similar where we see the same thing, a drop into the end of January, actually rises in the beginning of February here, and then another drop below before we see another test of the weekly SMA. And this is the point that I've referenced this many times in many other videos. It's the 47.7K pivot, roughly 48K, let's call it, which is halfway to 96K. And functionally, I believe that the price is going to behave the same way, where you can see here the SMA is also being pulled down below that Fibonacci pivot, forcing that Fibonacci pivot to act as resistance instead of support, and just making it even harder. Like it's like you're climbing up a mountain with a backpack, and then when you get to like 75% of the way up the mountain, somebody just puts a bunch of rocks on the backpack, inside of the backpack, extra to what you've already been doing. It just makes it harder and harder for the price to actually sustain those levels. And I do think that we're seeing something similar now. It's just kind of breaking down more violently. Look at that. Look at how much worse that looks than the two charts that I just showed you of 2018 and 2022. This looks much more dramatic, but it's only because we're already further into the progression earlier, I think is what's actually occurring. So we kind of had to regard that initial break in November and the retest at 96 as essentially the beginning of this downward trend in 2022. Like we're already here. we're already at the April point as of February, essentially. And what that would indicate to us is that we're going to continue to see drops further downward for the foreseeable future. And that's kind of what I'm focused on this channel is we need to pay close attention to where the price could stop or what's going to prevent it from doing that. So I've already talked about the anchored VWAP a little bit on the 4-hour time frame, which I do think is probably the most clear indicator of does the price have a possibility of consolidation or going higher, or is it going lower? If it touches 65.7K again and it breaks to the downside and it stays to the downside, even at like 65.2K, it will start to really push the price lower. So these are kind of the levels that we want to pay close attention to. 63 to 64K, it's represented as 64K as a Fibonacci pivot, but 63K is the psychological 50% point of the all-time highs of 126.2K in October of last year. So if the price can't maintain some momentum above that, again, the market is going to regard it as a failure, and it's going to start shooting the price down further. Just as a function of how it typically behaves in bear markets. I'm seeing a lot of different news stories about how there's all these different narratives of like why the price could recover or why it's going to like snap back in the next 6 months. And it's just not reflected by reality in the charts. And that's all that I want to focus on this channel is helping you understand the charts better so you can make better decisions for yourself about when you should accumulate, when you should sell, etc. I believe in the long-term value of this asset class. When I look at this chart, to me, this chart looks like equality. Like that looks like everybody gets a chance to play. Everyone can jump in if they educate themselves on the best times to allocate to the asset class. And the fact of the matter is we are nearing that time. We are very close to that time. For me, peak accumulation is when we actually start to break down below 60. Closer to 55 or 50. Right now, the bottom of the Bollinger Band is right around 55, 54. And we're looking at a similar progression to 2022, where it started to slope upward there. We interacted with it, and then we consolidated, and then it started to drop lower, and the price dropped lower as well, but it found its local bottoms. So we've talked about this many times on the channel. I think what I can believe as the local bottoms for this time is somewhere between 34 and 39K, according to this chart. This is 34.8 right here, as you can see reflected by these candles. And even if you want to drop it slightly lower to 33, I like this one better because it interacts here as well as with these guys. Very close to both, and actually right around 34.4. It's kind of arbitrary, like somewhere between 34 and 39, I think, just because the price spent so much time down there in 2021 and 2022 forming support, both in the middle of the bull market as well as when we then recovered later. Actually, when we recovered later, it was relatively short. And I do expect something similar here for this range in 2024, which we kind of can think of just as like the ETF boom. This is all of the people who are buying IBIT and then BlackRock having to buy spot Bitcoin as well for it. And then the same for MicroStrategy was loading up like hundreds of billions of dollars or tens of billions of dollars worth of Bitcoin during that time. So a lot of that momentum is not driven by retail. It's actually driven by institutional demand, which is different this cycle compared to previous cycles. And we'll see that reflected a little bit more when we look at the Bitcoin dominance chart later in the video. But really what we're looking for now is, can the price hold strength above about 54.6K? This is the bottom closing candles in 2024, right before the election boom. So we'll be looking to see if we can form any support there. And as you can see, that's actually like pretty close to where we went. We went actually to 59.9. So it's only another $5,000 lower, which is whatever, like 2% of these prices. Oh, never mind. That's not how you do math. It's like 13% of these prices. Which I guess feels a lot more significant when we're on this side of 100K instead of above 100K. When we're above 100K, from 100K to 110K is just a 10% swing. It's not really that crazy. So for a 5% swing to already be here, it's like the drops will feel crazier now than they do in context of like the April March one of last year. felt pretty crazy to people. But, when you zoom out far enough, that's going to be an excellent buying opportunity. You're just going to have to extend your time horizon of how long you can wait before you're in profit. And that's really most of the game for Bitcoin. I've talked about this in other videos. If you bought the top, and I think this is a good place for us to kind of look for those places of support. So this is 2021. And we're looking at the highest closing candles. This is the monthly time frame. So this is 61.3, and this is 50. What is that? Well, I'll just look at the candle, I guess. Close 57.7. And where did the price just go now? It went to 59.9, which is right in between the early 2021 peaks and the later 2021 peaks, and is only slightly above the levels that we consolidated at for most of 2024. I really think personally that this March 2024 peak, I don't want to say it changed how the price is going to behave, but it is an outlier. It is not normal for the price to do that so early in the halving year. And I think that kind of stunted how far price can go to the upside. That's why we didn't see a dramatic parabolic top, because we already got a new all-time high way earlier than we would normally get it, 6 to 9 months earlier than we would normally get it. So that's why the price movement has been pulled to the left now, where we're seeing a more violent breakdown earlier than we would normally. So if we're looking sort of for the key indicators that we would be able to recover, unfortunately, there is no precedent for us reclaiming the monthly SMA once we have lost it. Once we have lost it, we're gone for a while, often for a period of 9 to 12 months. I think this one was a little bit less severe in 2018, and we did see a rise in 2019 before, again, a failure down. And even if we don't want to count the COVID Black Swan event, we still retouched the monthly SMA in late 2019 before we have the COVID dump. So I think people have to take that in context, where in 2022, 2023, that was not the case, but that was kind of combined with, there was a lot going on in traditional financial markets. There was a lot of trends changing in that, as well as, I went over this in the Japanese yen carry trade, the amount of liquidity in 2021 versus where it started to go in 2022. There was kind of it got too thin, and there wasn't enough money to go around to things like the altcoins. So it went overwhelmingly to Bitcoin. Let's go take a look at the Bitcoin dominance chart, actually. I think this is one of the healthiest progressions that we've seen for this chart. Let me clean it up a little bit so you can see. The original cycle, we drop off a cliff. In the book, I refer to it as the Big Bang event, essentially, where prior to 2016, there's very little that people are gonna put money into instead of Bitcoin. About 98% of money in crypto is in Bitcoin at that point. Once Ethereum and XRP really come online and and Cardano and a couple of the other early coins, money starts to flow out violently in early 2017, mostly around the ICOs, when you were actually able to make initial coin offerings on Ethereum. That's when it really started, money started to flow out of Bitcoin. People were taking profits and started to jump into other assets. And that caused a pretty violent swing for Bitcoin dominance. I think the most violent swing that we'll ever see on the chart, quite frankly. And then we still had a lot of liquidity going into 2019, as you can see, pretty clear rise for Bitcoin dominance. And then again, a capitulation and a failure. And really what happened is this is about January of 2021, we had already peaked for Bitcoin dominance and started to give away all of that value, and it went to the other assets. So even though we were seeing a peak for Bitcoin in April initially, that was a local bottom for Bitcoin dominance at the time, before again it bounced and then consolidated. And then really, once it had fully bottomed in 2022, when it was bad for everybody, where everyone assumed that crypto was over and good run, everybody, we're done now, that's when Bitcoin dominance started to rise. I would say in a much healthier but more predictable and boring fashion than it has in the past. If we look at the 2018, 2019 one, it's pretty violent, pretty sporadic on its way up. There's a couple consolidation periods, but for the most part, it's straight up and to the right. Whereas for 2023, 2022 really signaling it and moving into 2023 and 2024. It was just a steady rise. It was just a steady decision, and you got to think about it psychologically as a steady decision of other people to continue to amass more Bitcoin instead of the other assets. And some people will say, "Oh, you're a Bitcoin maxi. You're a Bitcoin maxi," and I think that's a fundamental misunderstanding of what is actually occurring, where the world itself is looking desperately for somewhere to store the value of our economic energy. And you can put that in other investments, but Bitcoin is designed to hold all of that. It's designed to be a jar that you can keep filling with water forever. That's the point. It won't, there's no definable point in our near future where the demand will break the price. The supply will get thinner, and that will increase the price, but it won't fundamentally break the ability of you and I trust each other and we want to do business with each other. And for whatever reason, the government decides that we can't transact in dollars anymore. There's nothing preventing you and I from deciding to do business with each other in Bitcoin, even if the price is going to fluctuate. And I really think about it this way is like you transact with a business when you want that business to live forever with Bitcoin. If you just want to like make the trade or buy the eggs or whatever, you can just pay in cash. But if you're paying them in Bitcoin, what you're saying is, I want you to be in business forever, or for you to at least have the ability to weather financial storms. Like, I think people misunderstand that sometimes when they're thinking about just the exchange of money now is like you put it on a credit card and you don't think about it. But until you've paid off that credit, the issuer or whatever, the restaurant that is getting that debt from you is just taking it on good faith from the credit issuer that like they're putting the money up, and then it's the credit issuer's problem to get the money from you. It's really kind of like that system, I think, is going to change a lot over the coming decades. I think that we're going to move more towards asset-backed collateral or collateral-backed loans being the primary thing that banks and lenders prefer over unsecured debt and credit debt. I think we're going to reach a local high with that where they start to have interest rates that just don't make any sense. What's the point of having an interest rate of 40 or 50% on a credit card? It's insane. Like people will be forced to either stay in poverty forever or to use assets like Bitcoin and gold and real estate and stocks to go to a bank like JP Morgan Chase and say, hey, I have this hard asset. What will you give me for a return on a secured loan against it? They're going to favor those secured loans where they have some type of collateral than they are just like giving you another credit card or an unsecured personal loan or something like that. Or again, it'll just be the rates will not be in your favor compared to somebody who does have a hard asset, which is a big reason why I've made this channel. Is I just think people need to focus on Bitcoin itself, not just because the price is going to go up, but because you don't have enough of it. You need more of it for the world of tomorrow to really be able to provide for yourself and your family. Again, not financial advice. It's just property. So the same way that like a real estate agent can tell you to legally go buy a house or buy property, it's the same for Bitcoin, where like it's your decision how much of it you need or what to do with it. I really tell people like, if it improves the quality of your life, it's never a bad decision to sell some Bitcoin. You should be buying more of it still. But I think fundamentally what we're seeing is the amount of money is kind of stabilizing for I don't think we need to go back down to these levels again. This is like 36% of the money in crypto is in Bitcoin. And even the local bottoms in 2022 was about to 40%. I think over time, we're going to see that get tighter and tighter and tighter, where the total amount of money that is in Bitcoin is still going to stay relatively low. As you can see here, in July of last year, we peaked at about 66%. Yeah, right at about 66%. And then we started to go down lower. And now we have interacted with the monthly SMA again for a while now. Since August of last year, we've been like kind of kissing it and touching it. We are lower below it now than we have been in previous months. This is really the first time where we've seen a candle open on it and stay below it and not climb back out of this wick. So we would need to see the price basically the dominance level climb back to like 59.66%, or we have to accept that we're now about to finally see the breakdown And where that money is probably going to flow is not into altcoins. It's probably going to flow into stable coins initially. So we will see an explosion of the total amount of just like cash equivalents or stable coins that are being held, which is partially being, I would say, stunted by this crypto market structure bill that they're not able to like come to an agreement on. Basically, the banks don't want the crypto companies to be able to offer yield on stablecoins because it makes a high yield savings account completely irrelevant. If I can just hold USDT and get 8 to 12% on it, why on earth would I put money in a 4% yielding high yield savings account? So functionally, what that would do is it would take hundreds of billions, trillions of dollars that is sitting around passively in JP Morgan Chase's customers' savings accounts, and it would move it into these stable coins that can be moved anywhere, that it's very easy for you to move to another issuer or to somebody else who's going to give you a more competitive rate. Whereas these big banks, they thrive off of harsh times force smaller banks to close because they're not able to be as competitive as the ones that have large moats. That's their entire business model, is being able to buy up those banks when times start to get tough. So they do not want these crypto companies to be able to give yield, because what that will do is grow their customer base to such a point where there's going to be no reason for them to, you know, forego having a Coinbase account or some of these other exchanges versus having a Chase account. So that's something that they're really trying to lock in right now, and I just think that that is going to be bad news for Bitcoin. I don't expect that dominance is going to drop that low. I would imagine, again, this is 40% is like the local bottom in 2022. And I would imagine something similar to that, like 40 to 45% is probably the lowest it's going to go. And again, we would see that expressed by most of that money flowing into technically either alts or into stablecoins. I think it's going to overwhelmingly be stablecoins, though. So let's take one more look at the Bitcoin price, and let's actually jump to the daily time frame now. So on the monthly and the weekly, it's pretty clear. We're just continuing to drop lower. You can see the pivot points are a little bit different on this than on the other time frame. Here, 96 looks like it's never going to happen. Like it's not even a possibility. And it's really 80K. And here it's represented as 84 and 77.8K. But this region right in here, I think is going to be crucial, as that might be the highest that we're able to climb. But it's looking less and less likely. I hate to be bearish, perma-bearish. But like we said already, if we've been pulled to the left, then we're kind of seeing what we would normally see in April now. And it's just a matter of, can we consolidate? And this pivot that's been very important is 70.2K. And here we go. We see another example of this same kind of trajectory, where this is the daily, if the daily SMA, which is currently at about 71.1K, if that gets pulled below 70.2K, then by the time that we re-interact with that SMA, it's going to force 70.2K to form as resistance instead of support. What does that do? It pushes us down to the next lowest pivot point, which on the daily is 61.6. But again, we really want to see price above about 63, 64K, that being the 50% psychological level, as well as on the 4-hour time frame. Again, 65.7K is what we're looking at as the middle band of the anchored VWAP. If we lose that band, price is going to get pushed through these other Fibonacci pivots, and we're going to continue to go lower. The daily one does not have a lower one printed, which is decent. A lot of times when we look at the higher time frames, it'll show you like way down as low as like 10K, and it'll never hit that, but it just kind of like is represented in the indicator still, and we're not seeing anything pop up below that point, which is a good sign of potential consolidation. And really, we just want to look for that cross there, is what happens if the SMA gets pulled down to that 70.2K pivot. Has price already recovered at 70.2K? Because if it touches the pivot and the price goes to it at the same time, it's more likely that it's going to be possible that it could form as support, as opposed to if we go another, like, say it takes us another like 5 to 12 days for this to occur, and we're staying closer to the bottom side of that range than the top side of that range, which again, if we even touch 65.7K again, it's going to pull us lower if we get a close right at that or below that. It's very thin at the moment as support. It's not a key level on any of the higher time frames. It's just the anchored VWAP, which gives us a strong clue of where the price will go to, but not where it's like actually going to form support and resistance. That I really prefer to look at just like where did the month and the week close. That's all of these lines that I have. Like those are all weekly or monthly closes. And as you can see, the price goes back to those levels a lot, whether it wicks to them or has an actual close right next to them. Those are levels that some of those I've had drawn for years, like I don't really touch them. That's kind of the point, is you don't have to overcomplicate it. You don't need a million different indicators. I only have 2 indicators running right now, and I'm using 2 tools, which is the anchored VWAP and this anchored volume profile. And speaking of the anchored volume profile, we did have some people buy back in at around 69K, a decent amount, but not really enough to overwhelm just how much volume is lacking from 69K to about 76K. A lot of people either sold out or just did not have enough time to actually buy in at those prices. So the volume profile is starting to thicken a little bit while we are here, but the price is still being pushed lower. And again, if we see it touch 65.7K and we start closing below it, it's just not good for like a bullish signal of us reclaiming anything of value. So we may have to be prepared with the fact that we're already seeing this like April breakdown just earlier. That would be this guy. And actually 2018, I believe, is where it's more similar. Yeah, March, April. So seasonally, that's kind of what we have to expect, is that price is going to continue to break down. So where could it potentially break down to? So if we show weakness at 65.7, it's going to push us to 64 and 63. And as we just saw on the daily time frame, it's a little bit lower, like 61.6 or whatever the exact pivot point is. But the higher time frames are the ones that are going to be important. Again, if we hit the 50% psychological level, it's going to get pushed lower. There's only so long that we can stay above it once we've touched it. And this pivot point here is at 44K, which is, as you can see, way below even the lowest wick for 2024. So this is in August. The low is 49.6K roughly. So let's just call it 50K. Basically, if the price breaks below that, there's just nothing holding it up. There's nothing holding it up. That means that the majority of the ETF buyers, anybody who bought later than February, and they went live in like December, January, anyone who bought later than that is going to be out of profit. It's going to make them rethink whether or not they want to hold that or reapportion into something like gold or SPY, which, despite showing a little bit of weakness, it's not this much weakness. Like this, that's what weakness looks like on the chart. If we go over quickly to gold, that's not what weakness looks like. That's what a pullback looks like, but that's not what weakness looks like. And even same for SPY. That's what a pullback looks like, or a consolidation. That's fine. But it's not as violent as that. Like, why would you leave the other 2 charts for this chart? It just doesn't make any sense. So there's plenty of people who are older investors who are those ETF buyers in this zone here that are going to start trimming their positions and start selling their positions once they actually are underwater. And they're going to be, loath to like actually jump back in next time. So I do think there will be enough demand where it's not like all these people are going to leave the market just because their money went down for a little bit. They understand, they're thinking about it longer term. Companies like Fidelity and BlackRock in the first place are only integrating products around it because they understand, they think in decades, they do not think in years. You can make mistakes on a daily, a weekly, a monthly time frame, but on a yearly or decade-long time frame, typically the trend is your friend and it will work in your favor. So that's kind of what we have to keep in context is anytime we are below the monthly or the weekly SMA, it is reflected historically as a great time to buy the price or to buy the asset. So it's for all assets, not just Bitcoin, but really for Bitcoin, that's kind of how it functions. It's like when it's below, like you would not be upset if your cost basis was 38K. Even if your cost basis was 38K, and like I said, it's going to go to 34 to 39 potentially, that just means this is May of 2022, which means that you would have had to wait 4 years for a guarantee that your money is going to be up. And I hate to break it to you, but that's reality for Bitcoin in general. Is for most people, you have to wait about 2 to 4 years to remain in profit. The good news is that we're nearing the time where, these December 2022 lows, this is when we hit 15.4 and 16K. And you only had to wait basically like 2 to 4 months for the price to never be back at those levels ever again. So I don't know exactly where that comes this year. Again, if we're left translated by a couple months, that might mean that people are anticipating, and myself included, like an October-ish bottom. Whereas if we are getting pulled back, or it's happening more quickly than previous cycles, then we may actually see that bottom closer to the summertime, like June, July. I talk about it all the time, that White House event, the UFC thing. I think it's going to be so important for the charts. I think it really is like the closest to like a give them a bread in the circus and they will never revolt quote as we can get in modern life. I think that's like probably going to be the beginning of the end for the stock market and potentially the real estate market as well. And that's good. Like that is going to negatively affect Bitcoin. That's going to push Bitcoin lower. So it's quite possible that, in this local area that we're able to hold on to that 64K pivot for a little while before we actually have to give it up and start interacting with 50. And kind of similar to here, it's harder to see on the weekly time frame, or on the monthly time frame rather. But on the weekly time frame, as you can see, it's not just 1 week that we've been in between the 67.2K pivot and the 64K pivot. It's a period of consolidation. Now, a consolidation trend to the downside, but it takes place over a couple weeks. It does not happen immediately like it seems like it is reflected on the monthly chart. So it may take a while where we are in between 44 and 76, where we just kind of swing back and forth before we actually see a final breakdown lower. And that is kind of how the price has behaved in past cycles, where we saw the majority of the move had actually happened by June of 2022. That was like Celsius and Voyager were already done. FTX was not quite done yet. FTX, I believe, was here in November. But even then, that's only how much lower? It's only another 8 to 10% lower from where it initially dropped to. So we very well may see the same thing now where, if we drop to 44 by, let's call it like May or June, possibly July, I guess. July is the one that, what the hell, is the really important one. What are you doing? Work with me here. Then another like 8% down from that is where we see that 39K. So I would see that being pretty reasonable, where we're going to spend a decent amount of time right between 45 and 50 probably. And then the final capitulation towards the end of the year would be to that 34 to 39 level. I've heard lower. There's one channel that I respect that I won't mention the name of that mentioned 28K. I don't know that I believe that. I feel like 28K is kind of similar to in 2022. I thought we were going to drop to 10 to 12K. That's what the chart was telling me. And we only dropped to 15.4. So I would imagine it's going to be kind of similar this time where like 28, really like the important levels at that time were 24 and about 30 to 32K were very, very important on that previous cycle. And we did, obviously we broke below that, but we spent a lot of time there. Let's go and take a look at that. So I was able to like, really, this is early in my technical analysis career, but I was able to call those out like pretty clearly just because they were like midpoint levels pretty much of key psychological ranges. And as you can see, we spent like a decent amount of time just kind of chopping through those levels, which 32K is functionally the midpoint of 64K. So we have to think about it. And that's the first peak in 2021, 35K being the midpoint of 70K. I mean, technically it's 69K, but whatever, 34.5K being the midpoint at that level. And as you can see, we went like right around there. This is actually 32. But once we break past the first double peak, that's when we really started to see momentum. So we can kind of assume something similar here. If we take a look at what was the first of the double peak, then that is 124. So we would expect by the time we get back to around 61K on the other side of this bottoming event, that's when we would start to see momentum to the upside. And where do we just drop to? Again, 59.9. So super, super important, I think, because of the previous cycles, that we drop a little bit lower. It's possible that we get again to not quite the 50% mark from 64. That would be 32. It's possible that we get to that, but I feel like it's more likely that we actually see some strength at that level, and that we're able to stay above that in a similar way to 15.4 being the bottom instead of 10 or 12 being the bottom, even though, I thought it was going to be 10 because half of 20 is 10. So I assumed it was going to drop as low as 10 as a proper full 50% retracement from the previous all-time high, where it was not quite as bad. And if we take the same logic for this time, that would mean if it's not going to get quite to the 35K half of, again, 34.5K half of 69K peak in the end of 2021, where would that put us? Right at around 39K as being the lowest it will actually drop to, which is only a little bit lower than this Fibonacci pivot here, or whatever we can call it. This is 36.9K. Really, the point is needs to be above 32 to 35K. That's where we would most likely form some level of support for the price when we are dropping off a cliff. So that's what I would kind of be anticipating over the course of the next couple of weeks and months, is consolidation between about 50K and this 76.2K pivot. I would love for us to see that rise to 96K, but I think I was wrong. I don't think that we're going to see that. I think that the November one was the first failure of it, and then we saw the significant failure in January. And by the time that we get back to this SMA, it's going to be pulled all the way down here to 80K, which means that 80K, just like 96K would have been, is going to form as resistance, not support. It's going to push the price down lower. So that's what we're looking for in the short term, is just how long is the price able to consolidate between these ranges before it has to break lower, or is it able to make another push towards the 80K pivot? There's very little news events that are positive around Bitcoin right now. There's a lot of uncertainty in the markets, and when there is uncertainty in the markets, money is going to flow out of the easiest thing for it to flow out of, which is Bitcoin. It trades 24/7. So this is both a good and a bad thing. It's a good thing insofar as, like, if you're dedicated to just amassing more Bitcoin every month or every year, then this should not bother you. This price movement should not bother you. It should not make you nervous. This should be viewed as something, as an opportunity for you to buy more, to have your strategies in place. I talk pretty candidly on this channel. My primary strategy is what I call my credit leverage playbook, which is just leveraging my credit in order to get 0% balance transfer offers to buy a disproportionate amount of Bitcoin to what I would normally be able to purchase with my normal income. And I think that that's most relatable to most people watching this channel. Like, you probably just have a normal job. You probably want more Bitcoin than you have, and you're not sure if you should be buying other things that are riskier and that have like a higher performance, or if you should just be buying what little Bitcoin that you can afford. So the credit kind of allows, with the way that I do it, I talk about this more in the book, the way that I do it is just so that I'm only borrowing based on what I can pay back initially. So it's kind of just like you're getting all of your DCA all at once, and it ends up netting you considerably more Bitcoin than you would otherwise. And you're just taking on the risk. The same way I made the example earlier, where you go to a restaurant, you pay with credit. Now you've issued a deal. The credit issuer and the restaurant settle immediately, but now it's you and the credit issuer that have to settle the bill for the rest. And when they're giving you 0% balance transfer offers at 9 to 21 months of 0% APR, that's basically you borrowing against your own future willingness to work, is the way that I think about it. I'm going to wrap this video up, but that, for anyone who's curious about that, feel free to comment or ask questions. And really, about any of these points, feel free to ask questions if there's something that you want me to explain more. Thank you so much for hanging out for another video. I will be back on Friday. And if you're not subscribed to the website, bitcoinescapeplan.com, make sure you go over there and subscribe so you can get these key levels in your email. But pay close attention again to if we see a reaction to 65.7K on the 4 hour. That's going to tell us a lot. about, is the price just going to continue violently breaking down, or do we have enough room to consolidate and break higher? Thanks for watching, everyone.